a technical issue, so I will be only live in the our social media. So I failed uh, to switch on the live analysis for the go-to webinar attendees. So I'm really sorry for that. I don't know what's going on, but I had a technical issue and I couldn't go live into the GoToWebinar software. Some technical issue, I guess. I will investigate it after the live. So yeah, so today's live analysis will be available in YouTube, Facebook, and etc. All our social media mainly. So hopefully the people that attended the GoToWebinar, they will see on time. They will understand that I have some technical issues with the GoToWebinar right now. So okay, so live analysis as usual, trying to help with everything that you want us to help you with. I'm here to help. As I am keep saying, it's your session, so ask me anything you want. I will start with a quick briefing of what is happening and where we are, what we are facing so far today. In the meantime, just to quickly inform. Perfect. Okay. Greetings, Hamabert. Welcome. So yeah, as I said, I had a problem with the GoToWebinar, so I couldn't switch on the live there. I'm really sorry for that. Really sorry. So yeah, quick briefing. Yeah, I'm gonna share my screen later on. In the meantime, just a quick briefing of where we are standing. We're in the middle of the week. What's the trend for pound dollar? You're absolutely right, Ababert. Keys pound, especially after that peak in the inflation that we have since today. Okay, allow me a few minutes to sum up everything that has happened so far today and since yesterday. So we have yesterday afternoon the cooler PPI data, pretty much confirming that indeed the inflation in the US peaked, so that giving further room for the Fed to slow the rate hikes, to start pulling back a bit. And what was key overnight, other than the Australian wages that jumped higher, stronger for 9 years now, beating expectations and backing up that RBA, the Bank of Australia, will continue increasing rates on the back of a very tight labor market and persistent pressure on inflation. But what was key? What was key? It was the geopolitics. The geopolitics are back in play, unfortunately. There was that report about the missile inside the Polish borders, killing 2 people. So there was some fear caused. We've seen some fear getting back, being fueled. I will share my screen as well, being fueled. And that explains that these tiny safe haven bits that we have seen yesterday and overnight in the dollar, but that quickly returned back lower again. So the safe haven gains had returned, have reversed. So as I was saying, there was this missile rocket strike, I don't know how to call it, but quickly the comments from President Biden stating that it was unlikely the missile to be fired by Russia calmed down a bit the markets. So they held the calm nerves, and we've seen the risk aversion going lower again. I mean, turning back down again. So yeah, that was responsible for this boost of dollar over here, and the inflation and the PPI data, as I already mentioned earlier. So just okay, perfect. But we've seen that dollar is back on below the 106 territory. Just to put a line on, just for you to be 106. Here we are, 106, back below it. Okay, under pressure, remains in line with the speculation that the Fed will slow down rate hikes. Okay, so 106. I will put the daily chart on just to show you that 200-day moving average remains intact. So 1, 2, 3, 4 days, really close to 200. More precisely, yesterday was retested the 200, but quickly turned up, found some bullish sentiment on the cooler PPIs and on the geopolitical risk, and close back within above the 106.50. Today, turning back down again with dollar index in a significant pressure. MACD, you can see extending lower, RSI flirting with the 30 territory. So there is, it seems that there is a more bears pressure on dollar than bulls. And I would like to turn your attention to over here before I reply to your question about pound, the Robert. Here, it's something that you should keep an eye on, because a bearish crossing of 20-day moving average below 50 could just signal fact that there is further steam to the downside for dollar. Okay, so I'm going to zoom out. Obviously, 200 remains a very, very strong support level. Okay, so 105, and more precisely 105.550, and more precisely the around 105 territory. Just to round it up, here we are. Okay, that remains a key support level, which if it breaks, then the next handle, barrier, whatever you want to call it, for dollar goes down to 104 on 103.50 territory. Okay, so that was for pound. I will turn my attention to pound because is the okay, obviously stocks rebounded significantly. I mean, the attention is all over the place, but especially after the UK inflation this morning, and the fact that tomorrow we're going to have the autumn statement, and we are expecting an austerity budget, we're expecting tax rises, we're expecting spending cuts, sorry. It's what is really turns the attention to monitor pound. You can say, okay, Andrea, but it's just choppy, very small body candles. So small body candles, not something that it drives the attention for the time being. And you might be right, indeed, but it's because there's a lot of cautiousness ahead of what the government will report tomorrow. That's key. Oops. Sorry, just did something wrong, didn't I? Oh, okay. So as I was saying, yeah, it's because the yeah, I just noticed that I have the wrong title. That happens when start the day with some technical issues, and then we end up with a lot of other issues as well. Really sorry for that. So yes, as I was saying, this cautiousness, this sideways movements that we have seen for pound is ahead of the austerity budget tomorrow. So, Robert, trend for, okay, let's start as usual from the daily chart, dear Robert, and move on down and lower and lower in the time frame. And the reason why I want to show you the daily chart is because there used to be a very, very interesting channel over here. Okay, if I just be precise, let me be precise. Let me be precise. Yeah, so you can see that it was in an expanded triangle. Okay, broken. That's the daily chart. I will zoom in. Broken last week. Okay, and within this ascending triangle, we used to have some channels. I'm gonna just the ray, no ray, here we are. Some channels or some other triangles. Here we are. Here we are. Okay, and the reason why I'm putting this on is just for you to see that, first of all, I'm going to zoom in. First of all, we have the initial break last week of this ascending triangle. Okay, if I can call it like that, it's expanding one. And in the meantime, since September is posting an upwards channel. So remains consistent with the upwards channel, right? Breaking though to the upside that long-term ascending and expanding declining expanding triangle, indicating that the medium-term outlook, near-term outlook is changing into a more bullish one. And look at that. I'm gonna zoom in. Okay. I'm gonna use my simple moving averages. Okay, that's we are still in the daily chart. I want just to use the perfect. So over here we have the return. So it was a sign that started since last week, 7th of November. A break and a move above both moving averages, 20 and 50, and a bullish cross of the 20 above 50-day moving average. And you see the 20-day moving average keep rising away from the 50-day moving average. So that suggests that regardless that the long-term outlook, the really long-term outlook remains negative. So if I put the weekly chart on or the monthly chart on, you're going to see that MACD is really, really negative. It's in a continuous downtrend. So this might be just a correction. That's in the long term. However, in the near term, the outlook change. So key resistance is the 122 territory, the 200-day moving average, which actually coincides with the July's and August top. You see that? That's the next resistance areas. Resistance area for cable in the daily chart, okay? You can see that it keeps rising with Bollinger's expanding, MACD positive, right? Keep rising. Ignore stochastic for now because it's something that I'm using in my 1 hour chart, okay? Hi guys, hi dear, blessings to you as well. So yeah, so rising, expanded Bollinger's to the upside, MACD rising, RSI is a bit flattened but remains above 50, and we don't have a crossing. I mean, we don't have a poop or something. So something that indicates that we are still in a pretty much upwards trajectory. Okay, it's a bit softer. So connecting the bottoms, this is what I'm trying to do, connecting the bottoms of the of the RSI, because a pullback of RSI below this trend line will indicate a pullback on the price action. Okay, so sometimes you need to use trend lines for the indicators as well. They are quite helpful for trigger points, entry levels, and etc. So for the time being, what we are having is 1, 2, 3, 4 bullish candles. Okay, a small consolidation over here, back into the Bollinger Band area, so it's not overbought. Rising MACD, rising RSI, and next resistance at 122. So fractal, the latest fractal is at 119. So a move and a closure today above 119 could open the doors to 122 territory in 122.30. Now, let's move to the 1 hour chart, because anyway, the stochastics that I have over here is for the intraday setup, for this intraday setup. So let me just clear all this mess. Okay, bring back my exponential moving averages, etc. So what we are having over here is a stalled pound for the 1 hour chart. MACD flatten, stochastic flatten, RSI, what we're having over here, the 50 territory is somewhere here. Perfect. Here. So remains above 50, but it started pointing a bit lower. So what that means, okay, is that this rally is stalled a bit. So we might see some consolidation in the very, very short term. I mean, it might last for a few minutes, it might last for an hour. What is the key over here? So what we are having over here, we have two support levels. Okay, one is on this double bottom, coinciding a bit with the 50 period moving average and the Bollingers. So just to be on a better position, I will put it on the Bollingers. Okay, so retested 2 times, coinciding with Bollinger's bottom and slightly below 50 exponential moving average. The immediate one lies on the support level, the lowest level for the last 4 hours, and coinciding with 11 November on Friday's peak. So these are two support levels, immediate support levels. And resistance is on this latest peak at 119.42. Okay, because if I zoom out a bit, really, that explains a lot. What that explains? It explains that now is we have this pullback because he hit the 61.8 Fibonacci retracement level, the strongest retracement level based on Fibonacci sequence. So a break of that it turned back higher, and a break of this 119.42 could open the doors to a potential retest on 120 again, like what happened yesterday. Okay, so just to check something. Okay, but the fact that inflation is done shows that it's rising, adding some boost on the pound along with the weakness of dollar, on the speculation that Bank of England will proceed with further rate hikes. However, we have, as I said, the austerity budget tomorrow, so that could keep the pound sideways until Mr. Hand, the Chancellor Hand, presents and release their decisions. So keep an eye on these immediate support resistance levels, because what is going on over here in this intraday setup is just consolidation for the time being, with a potential pullback on retesting the bottom of the range, and it might continue doing some fluctuations between these two levels until tomorrow. Now, come on. Where am I? Where's your questions? Okay. So if you need anything else, Babert, let me know. Now, dollar Swiss, nice. Dollar Swiss. CAD Swiss, Euro Pound, Euro Dollar, Gold. Hello, Shanko. A lot of you want gold. Fair enough. New Zealand. Okay. One by one. Let's go to dollar Swiss. Dollar Swiss. Here we are. Dramatic fall. Like dollar yen, like dollar. Don't forget our risk-sensitive assets. So dramatic fall. And a very interesting doji candle over here, two doji candles outside Bollinger's, pretty much expected. It was oversold. It needed a bit of a correction before another attempt to the downside. And why I'm saying another possible attempt to the downside, simply because the bearish momentum is keep rising, okay? RSI the same, there is further steam to the downside. And if I zoom out, that's the weekly chart, and the reason why I'm posting the weekly chart on, because I want to show you that this is a level that has been tested in the middle of the year, back in June, July. So let me just come on. So here is, it was retested once again in July. Overall, however, you can see that dollar Swiss, since the beginning of the year, is really stuck within this range. Let me zoom in. This range between not 93.50 and 1 and the parity. But the odds of exiting this range are rising to the downside. Why? You need to check how big, how massive this weekly candle is. It's a massive. This is a weekly candle, massive weekly candle with nearly 700 pips decline in a single week. Okay, so that's why the break of this bottom could open the doors to 2021 lows, not 90 level, not 91, and etc. So this is an area to be monitored at the week's end or even month's end if it doesn't manage to break it earlier. Now, consolidation is the theme of the day, but more of a bearish pressure, as you can see. And let's go to the 1 hour chart to see what is going on. So, steady. Actually, what we have over here is a floor at 93.85. Next floor is the yesterday's bottom at 93.56. MACD really flat over here, so zero, it's neutral. Stochastic is oversold, but it doesn't really present any rebound, any bullish cross. RSI is turning slightly higher, but with a very weak slope as well. Okay, so what you need to pay attention, where you need to pay attention right now is on any reversal, at least above the previous low, which is at 94.12, and a bullish cross of your stochastic. That could suggest a limited rebound to 94.50, 94.40 territory. But for the time being, is really neutral, and that's a bit of, it might be due to the ahead of the US inflation and US market open, ahead of the US retail sales, and etc. So yeah. Euro dollar, okay, euro dollar. Oh, no, we have CAD Swiss as well, of course, CAD Swiss. So I'm gonna take it one by one. CAD Swiss. CAD Swiss. I'm gonna connect the peaks. I'm gonna connect the bottom. So you see that we have a tiny down channel since Friday afternoon. A tiny down channel. You see below. This is the 4-hour chart, guys. Okay, and I will put the daily chart on as well. That is also helpful, but okay. We have a channel, a downwards channel. So you see over here, if I zoom in, you can see that it tried to break above 20 period moving average, and is pulling back down again. So if I go further down to the 1-hour chart, we can see that, you see, rebounded, retested the upper trend line of the channel, and is turning back down again with floor at the lower bottom of the lower trend line of this channel. Stochastic point lower, neutral MACD, so pointing consolidation. RSI, it retested 30, but it's rebounding a bit. So that looks that the downtrend has already over. So let me check the 30 minutes chart. Bam, halting support, rebounded a bit because it was oversold. So we have a tiny correction right now, but the overall outlook remains under pressure. So we have a tiny correction. A return back below this bottom, open the doors to the downtrend. It's a lot of cautiousness, unfortunately. A lot of cautiousness, but it is what it is. Look at this massive consecutive daily candles that we have seen last week that forced the asset for a consolidation, a correction, but the momentum is negative. Okay, so any attempt, we'll put the weekly chart on so that we can find the floor. Any attempt, any confirmed breakout of this triple bottom, this is triple bottom, 1, 2, 3, triple bottom below the 0.7080 could open the doors to the 2020 territories. Okay, and I will use, I'm gonna use my Fibonacci extension on this latest rebound, just to help me find immediate support and resistance levels. So you see 61.8 is our immediate resistance, 0.7170, while next support other than this key triple bottom is the 70.20, and zoom out a bit, and that should be at 69 territory. Resistance, support. The break of this triple bottom could open the doors to 0.70, 0.69, or even lower, but there is a long way until then. It's a huge weekly candle, so that's why it needs to be monitored. Sure. Okay. Euro and gold. Euro find some steam, further steam. Yesterday, euro. Today it reverted losses. So found steam because we have the weak dollar, but also we had some comments out of Guido, that he pretty much said that, which is a price vice president, by the way, of ECB. That's why his comments are so crucial. He actually repeated that ECB could continue further rate hikes, and that supported the euro against the dollar. But you see, it found the ceiling already. This is the 1 hour chart. It found the ceiling at 1043. So it managed to recover 80% of yesterday's losses, but it struggled to extend and to move further higher. So a pullback right now. We have another 20 minutes for this candle to close, to be more precise. So let me, this is the 30 minutes chart. So up, doji, failing to extend higher, and a pullback. So a closure of this latest candle below 141. So let me be precise. Yeah, that's the latest bottom. And if we want to be just safe, 1041.41. A pullback and a closure below this latest bottom, it could bring the euro dollar back to 1038.66. But let me put my setup, the intraday setup. Let's see what's going on. Doji down, flatten moving average, and they started to slow down, to pull a bit lower. Stochastic, a bearish crossing stochastic. I'm getting rid of MACD just because it's not suitable for a 30 minutes chart. So you see, bearish cross of stochastic, a pullback of RSI as well, pullback on the price action. That's an indication that we might see a bit of a correction. So immediate support is at 1038 territory. Latest up fractals, 2 up fractals, 20 period moving average as well. And what else? Yeah, that's pretty much it. A break of that as well could bring back the focus into the 20 period moving average as well. Gold. By the way, in the daily chart, oh yeah, I forgot to do the euro dollar in a daily chart. So very, very important week for euro. Very important week for euro. Why? Because we have the break of the 200-day moving average twice. We don't have a confirmed breakout, okay? We haven't seen the daily candle closing, literally closing above the 200, but it's keep retesting and retesting yesterday and today. So a closure today above it could be key. It could be key because it could suggest the potential retest of, here we are, of 106 or even 107 level. I know it's far away, but the 200 is key. The 200 has never been tested since July 2021, so for more than a year now, a year and a half. Okay, haven't been tested, the asset hasn't moved above 200 since, let me be precise, June last year. Okay, so that might trigger some buying pressure, which eventually could retest these territories. And we have, what does I want to, yes, and we have a bullish cross of 20-day above the 50-day. Here we are, indicating that in the near term, at least for the next few days, maybe weeks, depends, there is more buying pressure. Bulls are in control instead of bears. So yeah, keep an eye on the closure today, because that could trigger a bounce and an extension to the 106 territory. Now, the 1 hour chart, we have covered that. There is a time pullback. By the way, just to bring back the attention to the daily chart, if the asset doesn't manage to extend above 200, to confirm a closure above 200, okay, a signal that it will get back down again into a negative outlook will be initially the 10270 territory, okay, and very, very importantly, okay, very, very important is the 1010, is the 50% Fibonacci level, and is the resistance that we had for since September. Okay, so keep an eye on 10270, because if we see a daily candle extending, decisively breaking and closing below 10270, it could signal that we might have the start of a pullback, the return back to the low territory, the return back below parity. Gold. Oh, gold was remarkable. I wasn't expecting this kind of performance last week. I was really, really pessimistic with gold, and I don't think anyone was expecting something like that, because it was fundamentally weak because of the central banks, and nothing was pointing for this rebound. Okay, whether this rebound is limited or not, we cannot really tell right now. We cannot really figure out right now. But what is certain is that we were in a downtrend. Can you see that? I will be precise, just to fix my standard deviation, because it doesn't look that good, doesn't look sufficient. Actually, okay, that was the good. Okay, here we are. The gold, this is a weekly chart, guys. Okay, so the gold has been to the downside for the whole year, and we have this massive weekly candle last week that not only broke the down channel that lasted for 11 months now, but also broken 200-day moving average, week moving average, broken the 50-week moving average, and extending higher. So next area to be seen is the 1800s, obviously, and 1810, which is the latest peak that we had in 2022. But if you see RSI cross above 50, a bit flattened. The candle was massive though, without any significant tails. So that suggests that there is steam. Let's see the daily chart. So boom, 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 correction, try to get back into the track of the Bollingers, correction, but remains bullish for 1, 2, 3, 4, 5 consecutive days in a row. Okay, RSI, you see that there is some further area to be covered to the upside. So next attention is at 1800s and 1809, which is the latest up fractal. Okay, so that is for gold. A flip lower, okay, 1766, and I don't mean just a retest, a bearish candle below 1766, to be precise, let's say 200. It looks like a better support, 1760 level, and it turned back to that area, and a breakout, a bearish candle closing below that area is the only thing that could open the doors, that could suggest that it's getting back in track with a downtrend. Okay, but that would be the very first sign. A very first sign. We need further confirmation, maybe back to 1730 as well, because it's is well above the down channel. So intraday, that's a 1 hour chart. I'm gonna put my template on. Oops, sorry. And I will use my regression channel once again. I love them. That looks nice. Yeah, perfect. So you see, it's in an up channel. Bum, 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 bum. Now it has just turned above the midline, rising moving averages, rising MACD. Sorry, no, MACD is a bit slow it down. Okay, that's interesting. That's very interesting. What I'm saying, okay, that's very interesting indeed. So we have divergence. Look at that. RSI, if I connect the peaks of RSI, they decline. If I connect, okay, if I ignore this massive move, and if I emphasize on the rest, I can see that the peaks of MACD also decline. Decline RSI, decline MACD, but a rising price. Guys, this might mean divergence. So we need to be a bit careful. This might mean divergence. This might mean that potentially it will get back in track with this long downtrend. But okay, that's for you. Food for food for thought. Okay. So for now, however, let's emphasize on the near-term picture on the 30 and 1 hour chart. Broken above the middle line of the channel, extended higher. Okay, we have some consolidation over here, and MACD are turning lower. Okay, so there's some consolidation. So a turn back below the midline, it could retest the 177 again. Here we are. While a break of that could retest again the bottom. So look at, pay attention on the mid of this channel. Okay, a return back lower again, like, oops, like here, like here, like here, like here. It could retest the 20-day period moving average in this 30-minute chart, so the 1777 level, or even lower the bottom of this range, of this channel. We did gold, we did euro. I'm not sure about that. Can you contact support team, please? Can you go live in the chat? Bravo, Emmanuel. So you have open a digital market account. Okay, cool. Good luck. Just go in the chat. Please tell us about gold. We have covered gold just now. Euro as well. Let's go to Nasdaq then. But before I go to Nasdaq, Mohammed saying hi. Gold going up 1820. It's strong. It's strong. It's in a consecutive bullish daily candles. I'm not sure about the 1820, but definitely the key resistance for the time being is the August highs and the round 1800s. Remember, 1800 is a key psychological level. Very important psychological level. Nasdaq. sorry. So, and Nasdaq, sorry. Okay. Yeah, actually, stocks have been have found some boost, significant boost since last week, but still, the outlook hasn't changed for stocks. I'm afraid. Look at that. Okay, that's Nasdaq. Okay, and it looks like, first of all, this looks like a possible head and shoulder, not really a confirmed one. Okay, possible head and shoulder, but even though it broken this 2 months resistance at 11,725, even though it broken it, okay, on Friday, the body of these candles are small, suggesting a lot of indecision and a lot of pressure as well, indicating that this was a limited move. The flattened RSI as well, the flattened MACD, because as you can see over here, so RSI is flat. Can you see that? Yes, you can. MACD turned positive, but the signal lines remain well below zero. Okay, so ignore stochastic because it's for the 1 hour chart. So that suggests that the bears are still on, pressuring, and there is a lot of indecision. It's not the daily chart hasn't changed. Nasdaq remains on pressure. So yeah, indeed, it recovers some losses, but that's just the 23%, 30% of the second half decline. And if I consider the year's decline, that's not even, yeah, that's the 23%, 25% recovery. So it's not a significant one. So what we have over here, we have the 12,000 as a very, very important resistance level, because the 000 number is a round number, is a 50% retracement of the latest down leg that we see in the second half of the year. Okay, so a decisive break above it could bring the asset to 12,400 territory, or even 500 territory, or a failure to break it could actually confirm that nothing has changed for stocks, and that the stocks remain in the downside, remain under pressure, and we might see it turning back to this range that we have seen for 2 months now. So the picture over here is more negative than positive. So indeed we had a bounce, but limited one. MACD hasn't turned into positive one, and the signal is still negative. RSI flattened, suggesting that this was a limited bounce. Okay, so keep an eye on a return to the 12,700, return back down, return back to this range, and a possible breakout, a closure above this latest top and the 50% Fibonacci, but it lacks of momentum, it lacks of bullish bias. Yeah, let's see. 1 hour chart though, boom, recover, and a pullback once again. So if I just put let me just, okay, it's in a triangle, we can say. Pullback, RSI turn below 50, stochastic bearish cross and keep pointing to the downside. So there is some near-term pressure. Near-term pressure. Support 10, 11, 8, 3, 4. And if that breaks, the next floor is on this morning's or yesterday's area over here, 11,700, 11,700, 11,730, somewhere there. Yeah, but yeah, it's pulling back. It's pulling back. That is, the stochastic is still pointing downward, so we have some near-term pressure. We support at 11,834. New Zealand. New Zealand. New Zealand should be somewhere here. It was a key mover today, especially Aussie, not so much Kiwi as Aussie, but both of the antipodians there. What's for Kiwi? It was Billy. Both antipodians have a continuous uptrend since the mid of October. Up, consecutive higher highs, consecutive higher lows, above 50-day moving average, above 20-day moving average. 50 and 20 are ready to cross. MACD rising over here. RSI flirting with the 70 territory, but it was rising since we have an uptrend with the next resistance at 62.33. If that breaks, the doors could open for 64.40 territory. So the peak that we've seen in August, it's in a nice smooth up channel, and the indicators agree with this up channel. Intraday now, I'm gonna put the 4-hour channel on. Spike. Sorry, I was supposed to be vice versa. So I put it wrong. I put it a bit. Here we are. So as long as the asset is being held above 61 level, okay, here we are, 61, then it remains positive. You can see how massive MACD is. Okay, you can see how massive, how way higher bullish MACD we have. RSI just posted another bullish cross. Here we are. You see that? Yes, you can. RSI, it has some fluctuations, it has some ups and downs, but remains above 50. So a pullback, it could be just a correction before another attempt to the upside, as long as the asset is being held above not 61. A return back below 161, not 61, it could retest the 60, not 60, 50, not 60, 60, or even 60, 40 territory. Okay. Dow. Okay, we've seen Nasdaq. Let's move on to Dow for sure. Yes, I need to have a drink. You're right. Okay, let's do Dow, and I will reply to you as well. Is Arreglo. So Dow. We have an article about Dow that Kader just wrote, by the way. Nonetheless, Dow, you need to okay, understand each one of you has his own trading style, his own indicators, time frames, but it's good to be aware of what's going on in the daily charts in order to have in mind the key support and resistance levels, the overall support and resistance levels. And why I'm saying that, because you can see Dow over here for 1, 2, 3, 4 consecutive days is posting some doji candles. That is raising questions on whether it has peaked its upwards trend and it's time for a pullback. So these 3 times retest and these doji candles at 33,400, sorry, 33,000, at 34,000 is key because it raised concerns on whether that bounce has run out of steam. Okay. So yeah, we need to keep monitoring the 34,000 and the body of the candles because for the time being there is an indecision, and if we see indecision at support levels or resistance levels, that equals to a potential reversal, but we don't have a confirmation yet for a reversal. So that's why we need to monitor and we need to pay attention to the details. We need to pay attention to a potential retest and a move below 33,000. Let me be precise. Or even the 20-day moving average over here, the 32,400 territory. Okay, because this might be the end of the up channel. Okay, and why I'm saying that, even though MACD is still positive, because I can see that even stochastic over here is struck. MACD is still positive indeed. So that's why I'm saying it's not confirmed, but definitely 33 and 34,000 are levels to be closely watched the next few days, because any exit of the asset from this range could either imply to a retest of 34,700 if it breaks higher, or it could signal the return back down, okay? Return back down and the resumption of the same downtrend like we see in August and September. So keep an eye on it. For the time being, it's just doji, choppy, okay? Intraday now, 1 hour chart, or I will put the 30 minutes chart, okay? So failed to extend gains over here, double top at the Bollinger 33,722, but we have a bullish cross of 5 and 9 exponential moving average and 1, 2, 3, nearly 4 consecutive down channel, stochastic down. So there is a bearish cross, a bearish pressure intraday. So the next support is at, here we are, 33,520. So an area that coincides lower Bollinger's latest low, 200 period moving average, and a break of it could open the doors to yesterday's bottom, 412 to be more precise. But let's have what's going on here. Bam. No, that's not helpful at all. But yeah, bearish cross, stochastic keep pointing downwards, RSI the same, MACD the same. So yeah, intraday supports at 33520, and if that breaks, it could extend to Friday's and yesterday's bottom and the 33,400 territory. Okay, normally, what's your preferred time frame when doing technical analysis? Because I'm doing a technical analysis for you guys, I am obliged to cover as much as I can. So daily, 4 hour, 1 hour, 30 minutes. So I'm trying to cover your preferences. I cannot tell you what I personally prefer, because it doesn't mean that it's suitable for you. It depends on you. If you're a scalper or if you're a long-term trader, if you have only an hour to spend every day at the markets, then you might consider yourself a day trader. So adding some, opening some positions that we might last for days or even weeks. So it's upon you, your personality, the time that you have free to spend in the markets. If you are more of a personality of a scalper or not, so fast moving, faster time frames such as 1 hour, 1 second, 1 minute, or 5 minutes, or 15 minutes. So I cannot really help you on that. I try to cover as much as I can, but in regards to what you will do, it's upon you. Go to a demo account, test yourself with several time frames, and find the one that makes you feel okay. If, for example, the 5 minute chart or the 1 minute chart is too fast for you and it gets you stressful, anxious, and etc., then it's not for you. If you try yourself in a 4 hour chart, 1 hour chart, maybe daily chart, and you feel that this is for you, then try that kind of approach. So that's solely upon you. Do a lot of tests in a demo account until you figure out what's best for you. Okay. Thank you, Muhammad. Okay, let's finish the session with gold again, since you asked for it. And that's the very last asset that I'm gonna cover. As I told you earlier, okay, I'm gonna start for the one. Just in order to avoid repetition, because I already covered gold, do you have any particular time frame that you want me to cover? Just because I did it already and people have already saw it, so let me know. Okay, I'm gonna start with the 1 hour chart. The something that is very interesting is that we have seen that from the 9th of November, I think that was last Thursday, wasn't it? Wednesday, for a week now, is in a channel, in an upwards channel. Okay, look at that. Bam, 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 and it's still on. What is interesting over here is that it broken on the European Open above the midline and is held above it since then. And we have a rising MACD, okay, in this 1 hour chart. Okay, stochastic over here, it has a bearish cross, but it's still above 80. So as long as we don't see a turn and a closure of the hourly candle below the midline, then it means that the bulls are in control. So a candle, an hourly candle that will be confirmed and closed below the midline, then it could suggest a retest of the lower bottom of the bottom of this up channel. Okay, 15, I guess you're referring to 15 minutes, not hours, right? 15 minutes, 15 minutes, right? Or you have the empty sorry, I guess you're referring to 15 minutes. Okay, 15 minutes it is then. Okay, so what we're having over here, bump, reversal, a bit of a triangle. This is what we are seeing over here, a bit of a triangle, steadiness it is for the 15 minutes chart, my dear. So fast and moving average are flattened. Stochastic, however, has posted a bullish cross, but now it has flattened. Okay, so what you can do is just, I'm gonna get rid of this channel. You need to keep monitoring your fast moving averages. Okay, and I'm gonna get rid of that as well. And since you're referring to 15 minutes chart, you need to keep an eye on this latest bottom and these latest tops. Okay, so a move and a break of 1780 could signal the start of a very, very short downtrend for the 15 minutes chart. So the next support, if that happens, I'll be on 1777. To the flip side, a break of this trend line could, let me just, because it's a 15 minutes chart, it's a very, very small near term. So as I was saying, a break of the descending triangle that I put on could turn the attention to the 1787. Okay, that's for you, dear. So MACD still positive. Stochastic flat 10 RSI is pulling back. So let me just test something once again. What we have over here, connecting the bottoms. So yeah, a cross below this trend line and a break of a 1780 could open the doors to 1777 or even 1775, but nothing really clear for the time being. Keep your attention on stochastic and RSI, okay? Consolidation is the case right now. I started trading on the 21st of October. How can you do Euro Pound? Okay, last but not least, Euro Pound it is. Where's my Euro Pound? Here it is. They might have, they are not out yet. The retail sales are not out yet, but they could, yes, they could, because imagine that if indeed we see a spike of retail sales, it means that that there we have still a strong retail sales sector in the US. A contraction, though, slower than expected retail sales, suggests that regardless of the fact that inflation came cooler, PPI came cooler, US will eventually end in the recession as well. Not as hard one as the rest of the countries, a very soft one, but yeah, it could have an impact, yes, because a mist of expectations could add further pressure on the dollar. Yeah. So keep an eye. We have another hour until the retail sales are out. So and we have Canadian inflation as well. Don't forget that. Euro pound. Okay, a lot of choppiness. This is what Euro pound is, because both countries are in a recession. Both countries are facing supply chain disruption, a shortage of energy. They delayed the rate hikes as well, both of them. So there is a lot of consolidation. So the first thing that you have to do, dear Michael, is not Michael, it was April, is find out your immediate support and resistance levels, and that's on the top of the November. So 88. Those will be let me be precise. 88.30, and the bottom of it be on the here we are, 86.85. Okay, this is the immediate support and resistance levels. Obviously, you can see that since September it entered a ranging mode. You see, so if I just zoom in and emphasize on the last 1, 2, 3 months, it's just bouncing between 85.70 and 88.30. So that's the overall picture. I'm gonna get rid of. Come on! I want to get rid of the rectangle. Delete, close. Okay. Okay, perfect. And the very next one will be our one. Okay, so that's consolidation for the daily chart. I have nothing to say other than that for the daily chart. So 1 hour chart now. Here we are. Okay. First of all, no, let's start with the 4 hour chart because we have this ceiling, okay, the 8830, 30, 8830, perfect. But we have since 7th of November an ascending floor, right? Confluencing with the 200 period moving average. That's the 4 hour chart. And I will zoom in into the 1 hour chart to see whether this is helpful enough. So what we are seeing, okay, drift, rebounded this trend line, extended higher, and then again down, posting a higher high. Now it's to the upside again. And if I zoom in, okay, we're gonna see some higher highs and higher lows. So what we have over here is a rising RSI, rising MACD, okay? Okay, stochastic is a bit neutral, it's pointing down, but the slope is not significant. So we have a small, let me just, 1.5, it should work. A very near-term, short-term intraday up channel over here. Okay. So, oh, interesting. So rebounded. We have a long tails higher indicating that despite the effort of the bulls, the bears managed to push the price lower. So there is some resistance over here. This is not, I'm afraid this is not a clear picture, dear April. The long tails over here add a lot of indecision for this asset. From this asset. From the flip side, okay, RSIs keep rising, but it's very close to 50 territory. Bollinger's expanding slightly higher. So the asset could retest again the 61.8 Fibonacci level, that's 0.8767. Yeah, the situation is a bit weird over here. That's the 30 minutes channel, and the reason why I put that on is just to see how it performs in the near term, in the very near term. So extended gains, but struggling. You see, 1, 2, 3 sessions struggling to confirm a closure above 50. Yeah. Keep an eye on the middle of this trend line and the 50 period moving average DRA for a 30 minutes chart. That could imply to a few more pips to the upside and the retest of a 87.70 territory. Okay, but yeah, it looks a bit limited. The bounce looks a bit limited overall. Yeah. You see, if I put the 4 hour channel chart on, we have a bullish candle indeed the last 4 hours, but we have equal tails up and equal tail down. That suggests indecision. That's why I'm saying that the picture is not clear whether it will indeed get up higher, retesting the top of the range and the 8800, or whether it will pull back down. So this needs a bit patience. You need to wait for further signs, I'm afraid. As I said earlier, Michael, yes, they could have some impact, especially if they provide a big miss. That will come in contrast with the slower inflation. So a big miss suggests that the softer recession is still on, is on for the US. So it might pressure the dollar. On the flip side, the big spike could help the dollar. Okay, so that's pretty much it. But that's intraday, by the way, Michael. Okay, intraday. For the time being, it's in a downwards pressure below 106. So let's wait until the data are out. It's in an hour. And that is what causing this choppiness, by the way, the anticipation of the data, both the Canadian inflation and the retail sales. Guys, I'm gonna call it a day. I'm running out of steam. If there are no further questions, we're gonna repeat our live analysis possibly on tomorrow. Okay, because it's a key day. We have the government announcement from UK. So yeah, if there are no further questions, I'm gonna call it a date. Thank you very much as well. Have a great day ahead. Take care, and I'll see you again tomorrow.